Thank you very much for the introduction. We have two ladies here with 4 gentlemen, and we're looking at very exciting topic, deep tech and AI in Greater China. I always love this idea. And before we start, a quick note, because we're gonna stop this panel sharp at 6 p.m. If you have any questions, make sure you scan the QR code, send them in. Okay, I will start with a round of introduction, allow our speakers to do it by themselves. Let's start with Philip, and then this we go.
Thank you so much for having me here today. It's an honor. Philip Hu from Primavera Capital. I'm a founding member. We have 3 different strategies: private equity, venture, and credit, managing around $20 billion across those strategies, over 100 portfolio companies and 100 people globally. So we've been doing cross-border since 2015.
Good afternoon. My name is Andy Yin from Olive Asset Management. We represent Chinese-speaking high net worth individuals and family offices. We are fundamentally an asset allocator. We help our clients deploy the capital across the globe in different strategies, different asset classes, and different fund and direct investment projects. On average, we deploy about $2 to $3 billion every year.
Yeah, so my name is Paul Wan. I'm with the University of Hong Kong, so probably the only speaker from the university side today. I might be in the wrong panel because all these guys are investors, and but for I think I'm in this panel because one reason that we built a very small fund of ourselves, but it's not for the endowment fund side, but it's more interestingly to fund of funds to support our startups. So I guess we can talk more about that. So that will be more relevant to the audience today. Yeah, thank you.
Hi everyone, I'm Alice from Imperial Sky Partner. We are actually a venture capital investing in physical AI and opportunities along the value chain of physical AI. We are actually a pretty new GP in the venture capital field. We were founded in 2023 and had the first close by the end of 2025. So we are actually in the active deployment mode. The investment thesis for us is like we invest small, we incubate and create value by leveraging our established strategic partnership network with market leaders, for example, Dreamy Technology, market leader in logistics, and also the universities like Tsinghua, Jiaotong, Zhejiang, etc. So I believe university is part of the ecosystem right now, especially for deep tech. We are very glad to stand here facing the next chapter of China Deep Tech. And thanks again for having me, and delighted to share more. Thank you.
Hi, everybody. Good evening. And for myself, my name is Raphael. Unlike the name and the face, we are actually at T Capital, a Chinese venture and growth fund. We originate from Tsinghua University in Beijing. We are since 2008 in business. We manage about $2 billion equivalent, so we have RMB and USD funds, and we focus exclusively on technology investment. Nowadays, people call it deep tech. 15 years ago, it was industrials, advanced manufacturing, then technology, then high tech. Now we're in deep tech. So we do everything that kind of are physical components, industrial components, very high IP threshold, and that's actually why, Paul, you mentioned the university ecosystem. It's very important for us, and not just is the Tsinghua Endowment Fund our longest LP, but a lot of our companies actually come out of universities, and everybody has heard of Zhipua, I think, and we met them actually before they started the business in Tsinghua. So very excited to talk about that today.
I believe our speakers already explained, Dr. Wang, you are not at the wrong panel. Yesterday at HKVCA, one of the panel, they were also talking about all the AI opportunities coming up. The leaders of these embodied AI or large language model companies are mostly from the university ecosystem. That's where we're seeing the opportunities. So love to hear more. But Philip, start with you. Looking at the past 1 year, startup fundraising is really coming back in Greater China. I'm quoting the data from Crunchbase that's higher in the first quarter, a clear rebound, estimate 16.5 billion US dollars, or 60% of Asian startup funding went into China-based startups in the first quarter. So what is the single most structural shift that you see in the ecosystem? Because we're talking about underwriting deep tech and AI in China. What's the shift that suggests that investors are underwriting the sector differently these days?
Thank you for the question. I'd like to answer it in two parts. So the first part would be around the time frame you mentioned, 12, 18 months. So Stanford University published its AI index report just in the last few weeks. And it's really interesting because one component of that report compares US and China and their AI models. If you look back to May 2023, they have this chart, and it's a very clear gap between US and China, where US is clearly a leader in terms of AI models. You fast forward to today, and the published report shows they said that gap has basically disappeared, and the gap is around 2 to 3% difference in terms of performance. So I think as a near-term part one answer to that question is there's data out there to clearly show China and US basically neck to neck in terms of AI models, as one example. The second part of the answer I want to share is a little bit more long term, right? If you look at a report that is done by ASPE, ASPE is an Australian think tank, and they have this annual critical technology research report, and they compare different countries across, now it's 74 critical technologies, whether it's AI, computing, cyber, space, new materials, all of that. And they've been doing this for a very long time. If you look at data from 2003 to 2007, it showed that US led in 60 out of 64 critical technologies. China led in 3 at the time. You fast forward to the latest data, which is 2020 to 2024, they're now covering 74 critical technologies, of which China now leads in 66, US in 8. Right. So I think if you look at that, it's not something that's happened overnight. That's happened over a longer period of time. And I think the last part of this longer term answer for the question is infrastructure. So Sam Altman last year testifying to Congress basically felt that AI, the cost of AI will be equivalent to the cost of energy. Right. And if you look at a US Federal Reserve report that was published second half of last year, they actually highlight one area that the US has a potential area of concern when it comes to this is energy. They highlighted that China has 2 to 3 times more energy. And actually, if you look at that energy, it's increasingly more renewable. So in terms of renewable energy capacity in China, it's now reached 60%, right? So US, comparable, it is not focused on renewables. And actually, you look at renewable energy that is produced in China, it's more than all the energy combined produced in Europe. So I think it's a combination of things that have been happening more recently, but also a combination of, that infrastructure and all these things have taken time.
Right. So, Philip, you shared quite some comparison over there. Andy, over to you because you invest globally. In terms of China, AI, and deep tech, where does it sit on the risk-reward spectrum when you look at China versus US, for example, and other markets?
By listening to their introduction, I just realized, and for the audience as well, when you guys grow out of campus, when you guys grow out of A, B, C series, come to me. Because we're asset allocators, so we invest in late stage. We like to see more visibility. So we invested with a lot of the Chinese and US really high-flying large language model companies. I wouldn't name the names, but call it the top 10 global. If you look at the sort of the token consumption ranking, we are in probably 7 out of the top 10. large language model companies. So please remember my name, and when you guys grow to that stage, call me. So three things. Three things that I look at when we decide to invest, because essentially investing, we prefer to invest in funds. So we invested with a lot of VC funds. But when it comes to direct investment into single companies, there are three things we look at. One is TAM, total addressable market. It has to be north of $10 billion. So the sky has to be a bit high. And second, the company has to be the category leader. There's horse racing. There are many competitors. A lot of people, a lot of companies will die. So we'll only back, ideally the number one, but absolutely top three. And the third is you have to have financials. You have to have real revenue and ideally profit. So your value proposition is not just on paper; it's proven. And when it comes to geography, obviously, China and the U.S. are the two main markets where innovation is happening. We don't distinguish or we discriminate either China or U.S. We embrace both, and we see different trajectories and different type of applications and different types of advantages. And China has a lot of great. I graduated from Tsinghua as well. So I know, even though I'm probably one of the worst students, so I ended up in finance. But a lot of brilliant guys, and China is very famous for large domestic market, low cost, a lot of application innovation. So this country, this market, has its unique characteristics. I think. We've seen internet, mobile internet, and I'm sure in the AI age, similar types of companies that take advantage of the market uniqueness will eventually flourish. And the U.S. obviously, there are a lot of interesting companies, and we're looking at in tens of billions and hundreds of billions of dollars of valuation with real traction in revenue in customers. So very exciting time. And again, going back to my original comment, so try hard to grow fast because your competitors are not sleeping. So grow fast, and when you get to that stage, come to me. We'll add some fuel to the engine.
Thank you, Andy. I think that was mentioned in the previous panel as well. The wealthy generation from China is getting more interested in AI opportunities, not just in developed markets, but also in China. And Dr. Wang, over to you. It's set now. Now it's a time for scientists to make money. I think it's fair to say that. You look at the founders of Moonshot and all the other major LLM in China, all have deep university connections. So from your side, one topic is frequently discussed is the valley of death. Working closely with startups from the ecosystem of Hong Kong U, what are the common challenges that they are still facing at the early stage, and what metrics you're tracking when you know, okay, this startup is ready to go private market for fundraising?
Okay, actually, nowadays the situation has changed dramatically, particularly with the AI tsunami. We are now facing the challenge of keeping our young professors at the faculties. Because just recently, I got phone calls from some VC partners saying, hey, can you talk to this professor? Because we try to invest in his company, his lead investor doesn't allow that. Can you put some good words for me? And also then the faculty dean, and we had a casual chat and say he's having trouble keeping those young faculties. He recently recruited from the top university from all over the world in that faculty because they get much better paid nowadays for the AI startup world. So for AI, I don't think there is any value of death nowadays because they can start very early on, even they are still with the university. They got a huge amount of investment. They got a lot of support. Of course, we also see the value of death in the other deep tech areas. For example, like biotech, like all these other material science. That usually takes much longer time. And the biggest structural bottleneck, I believe, is the team. So that is the most challenging part for us, because a lot of times we see a very good technology, good professor, usually not a very good entrepreneur, right? So when they found the right entrepreneur to partner with them, that's when the project begins to take off. So that we have seen that repeatedly. So we are trying our best to address that with all the resources, of course, with the VCs, friends in the room. If you see some good serial entrepreneurs who are looking for new challenges, opportunities, talk to us. We're happy. We will be very happy to introduce them to our scientists, so that maybe they can come to something that really exciting.
Thank you. I love how everyone is low-key marketing here. We're going to charge a commission fee later.
Thank you.
Dr. Wang, stay with me with a little bit. Since the launch of Hong Kong U's Entrepreneurship Engine Fund, and that's the fund of Hong Kong U, you have formed fund partnerships with 9 GPs to date. What have you learned about what these local or regional international VCs are looking for from the HKU ecosystem?
Yes. So so far we have been doing quite well. Was our at least 2 joint funds just recently announced in March. So the idea of that is we put some money into these funds, and they promise to invest 8 times of the money we put in to Hong Kong affiliated startups. And we allow them to make free decisions, and we do not intervene. So by doing that, we actually see a very interesting phenomenon, because we also learned a lot, because I sit on the observer seats during their investment committee meetings. And I'm really happy to see that those professional early stage investors look at those deals from very different perspectives than the general financial investors we have seen in the local ecosystem. So I believe that is the part that we truly did something right. By doing that, we also mobilize their expertise to really nurture those startups, which is probably much more needed than money. Because just to disclaim, because we are not the endowment fund, our fund size is very small compared to everyone in this room. We only have 120 million Hong Kong dollars as a fund of funds for 9 GPs, which means each fund only gets a very tiny piece of amount. But that does leverage a lot. So I believe that's some very good lessons we have learned through this experience.
Thank you, Dr. Wang. Over to Alice and also Raffaello. Congratulations on both of your fundraising successes lately. So Alice, since you focus largely on hard tech and physical AI, and we have seen a lot of massive deals in that area from China in the past few months, where do you see the still reasonably priced opportunities when it is physical AI relevant in Greater China?
So I believe like all like the physical AI team or like the startups where they have the ecosystem, both the platform, both behind it, is where we are going to underwrite and we're going to invest in. So that's why we mentioned that like the collaboration with the universities, with the industry leaders, with also like investors from different stages is important. So the collaborations, like I think from the last chapter of physical AI, we all know that the Chinese suppliers or the producer can build everything from scratch or from an idea. And we are now standing in the next chapter where you will add your thoughts, your understanding of the market around the world to just this tangible product. And that's where one company differentiate from the other. And what close like the whole flywheel is the talents. So we can see like the whole process from like a seed round to a pre-IPO really speed up. And the seeds is usually from the university. You will probably receive my call like very soon. And so like the last puzzle of the whole flywheel is actually the talents, not just those R&D ones, but also the ones like with finance and economic background, as well as industry expertise. More importantly, like those ones with the compound talents, right? And the whole three elements create like a flywheel that rotates, and the capital makes it like rotate faster and faster. That's basically what we underwrite and what we value the most.
Because Imperium has one of the major LPs, that's Dreamy Technology from China. So yes, it is true, it was founded 2023, but with a big consumer brand backing it, with good cash flow, good capital on the balance sheet. Does that mean that also influence your investment criteria? Do you always look for a strategic angle?
As a independent venture capital, the sole and most important goal is the financial returns. So we generate excess return for our LP, including Dreamy. And with like the back from like industry leaders like Dreamy Technology and like some other partners that we are developing, we want to like bring more value creation to the companies that we invested in, and we want them to be recognized and the new ideas to be recognized by those industries. Like the as mentioned by actually Dr. Wan, sorry about that. I'm very bad at names. Like those scientists, they really understand the technology. They are R&D expertise, but they don't know how to commercialize it. And on the other side, the industry experts actually will receive a lot of requests for some like industry insight sharings from the conglomerates. They don't know what's going on in the tech world, even though they understand the trend and like the insightful knowledge, but they don't know how to apply it into their business. And for those like those large ships, turnaround for them is very difficult. They want to pay less and lose less, right? So that being said, so we are like sort of creating a value for both our partnerships and also the portfolio companies with established network. And I believe a recognized portfolio company by the industry can end up with the premium valuation.
Thank you. I'd love to learn more about your global investment strategy a bit later. So, Raphael, your debut US dollar fund was closed several months ago. Could you give us an update in terms of what are the latest deals you've done and your deal pipeline that's on the deep tech end?
Okay. Sure. So actually, the fund was closed end of 24. So we've been now in deployment for a year and a half. But actually, we're fully deployed. So we have done 12 investments. And I wish I would have been on this panel earlier, because Andy has the money, Paul has the technology, and Alice has the talent. So we got it all figured out here, right? But I think, you know, despite that, we still have invested in some very interesting companies, technologies. And also what's important to mention, so we do love universities as an origin for good companies, and we have seen that with Zhipu, we have seen that with other companies as well. But actually, that's only about 30% of our deal flow. The other 70% come from all the rest of the spectrum. And actually, what's a very prevalent opportunity in China, especially in deep tech field, are founders that come out of big technology companies or MNCs. So we have had several, and some of the best investments we have made are companies that were founded by someone coming out of Corning with a lot of deep expertise and experience and already an existing patent portfolio in photonics, or somebody coming out of KLA who said, I will build the KLA equivalent for metrology and inspection equipment for semiconductor front-end equipment. Or more threats, a portfolio company that just went IPO in December, the founder was the CEO of NVIDIA in China, and in 2020 couldn't sell any more of NVIDIA chips in China. He said, you know what, I'll just build my own chip. So that's actually a lot, like de-risking a lot of your equation because you have good founders. And we have deployed to people in different sectors with that kind of background. So we've deployed in nuclear fusion with a US dollar fund, which is also something you don't usually see. We have backed the leading company for HBM chip design. So in AI compute, everybody talks about GPUs, but a lot of people forget about memory. And especially with high GPU power, you need very capable memory chips, which are based on memory stacking or 3D stacking. So that's something we invested with our dollar fund. We have invested in RISC-V based chip data center infrastructure chips. We do some low altitude economy, eVTOL investment, chips for robotics. We have invested in companies in the field of energy transition. So Philip mentioned this, also very important topic in China. And actually, this is going to be the biggest bottleneck of AI. It's not the chips, it's not the LLMs, it's not the agentic AI, it's energy. And all the energy China has today, whether it's fossil, whether it's renewable, it's not going to be enough. You need a combination of all of it. You need additional sources like nuclear fusion, traditional nuclear fission, and then you need an infrastructure and a power grid that is able to transfer this kind of energy across a long distance with a very high efficiency, including storage. So these are the topics we cover. That's why our fund is fully deployed. It was a very busy year and a half, but there's still a great opportunity set, and things are going, are very promising.
A lot of exciting opportunities.
Can I make one more comment? So this time around, AI industrial revolution is different from the previous few rounds in that it's very capital intensive. So you've seen successful, now multi-billion-dollar companies. Their fundraising pacing is unprecedented. So don't be shy. Don't be shy raising bigger checks and raising more frequently. And capital now is so the intensity is so much. It becomes a competitive advantage. Whoever has more money can recruit better talents, can run better models,
survive the longest in the game.
Survive longer. So capital is really the name of the game for this time of the Industrial Revolution.
Thank you. We do have some questions from the audience coming in. So Raphael, I expect you to take the first one. I will get back to you on that a bit later. And maybe Philip, you can take the second one on winning back Western LPs. So Raphael, stay with me because I'm a journalist. When you say your fund one was fully deployed, I have to ask, fund two plans? Can you share a little bit on that?
Thank you for skipping that question from the audience. Of course, I mean, we do have fund two plans, but as I mentioned, so our background is a bit different. So also our fundraising is a bit different from the typical kind of private markets game. So even though we're fully deployed, and by LPA terms, I could have started raising last year in September, I'm not planning to raise fund two until next year. The reason being is we've had a lot of trust from international LPs. Actually, half of our LPs in the dollar fund are Chinese LPs, also very different. But the other half are people who have never invested in China before and trust us a lot. And I said, let me give you some money back first before I'm going to ask you for money again. At the same time, we have some LPs who said, look, I don't want to wait. This is going really well, so I want to give you more money. So we focus more on co-investment now. We give active co-investment opportunities to our LPs. We're also, this year, we've set up a co-investment fund, which is preferably given to existing LPs. We're also on board some new LPs who want to try without the blind pool risk. But really, fund two next year. And we're not too worried. We rather want to do a good job one by one instead of rushing. Even though, as Andy said, it's important nowadays to have deep pockets. Yeah.
Definitely, we're looking forward to that. So Philip, the question from the audience is: China's AI and robotics edge winning back Western LPs? Are China's private markets bottoming out?
I think not just Western LPs, but I think any LP in any geography, which has been spoken about earlier in this conference, is that distributions is important. And Rafael, you just mentioned, right, in terms of returning capital. So I think whether it's China, whether it's other regions, distributions is important, right? And I feel like at least the momentum that we see so far points us in the right direction. But what I do want to share is data around Western corporates or global corporates that have been pouring loads of capital into China, right? And I think that has a positive impact elsewhere. Jensen Huang, for example, on his last trip to Hong Kong, he had said that the GBA, there's nowhere else on the planet but the GBA where mechatronics and AI coexist at a high level. He said, not in Europe, not in US, it's GBA, right? So I think that's one example. I think the second example that was mentioned on the last panel too is around biotech, right? If you look at out licensing for biotech and for drugs, China accounted for 50%, 50% of out licensing. US dropped to 25%. Europe was around 20%. Japan is low single digit. If you look at, just from 2021, China accounted for about 10%, right? So I think to go from that, in that short period of time, that tells you something about, what's going on in China. So I think going back to the LP question, it feels from this conference a bit more positive around China, but we'll start to see. So one last point, and this may lead into capital on the LP side, writing those checks and sending them in, is Hong Kong last year, we all know, was number one for IPO proceeds, right? 2 out of the 5 largest IPOs were in Hong Kong. Q1 this year, in 2026, that momentum continued. Hong Kong was still number one for IPO proceeds globally, and 3 out of the 5 largest IPOs were in Hong Kong. So we'll see. I think we are feeling more optimistic than we were 12, 18 months ago.
Definitely.
Philip, maybe just to add one small point, I think what also helped a lot, and we talked about it earlier, one small part is the visa-free travel to China. A lot of people coming back, but that's only the base. And then the game changer for us was the Chinese New Year show with the dancing robots, right? I'm out there in Singapore and Europe telling people for 2 years, you have to look at Chinese robotics, you have to look at Chinese AI, and everybody say, yeah, sure. And then you have one video of 1 minute dancing of robots, and all of a sudden people start calling us and they say, "Can you still doing this? Can we come and visit you?" And
well, I mean, we were talking about this before the panel where I bumped into a tourist in Hong Kong from the UK, and they're saying, "Oh, is it easy to get to Shenzhen? Because I hear you can get food delivered by drones." Right? So people are starting to see it. And I think another thing that's really cool about China is Yum China, one of our portfolio companies. It's the largest restaurant business in China, over 17,000 restaurants. In the last few weeks, signed a partnership with BYD. BYD, for their latest fast charging, you can go from 10% to 97% charged in 9 minutes. So this partnership between Yum China, which is in particular KFC and BYD, is they're going to roll out charging stations where it's possible at KFCs. You can charge your car in 9 minutes, and they'll have a special menu in your car to order fried chicken. So I think this is the kind of stuff that you don't see anywhere else, and I think there's more of that.
These are great China stories. I love hearing more about it. At the same time, when we talk about investors, so LPs look at into a certain market, it's always about exit, liquidity. Is it delivering good enough returns? So, Andy, from your perspective, we've had good IPO in Hong Kong since last year. Good start into this year. What is your outlook for the exit environment for the remaining of this year?
Well, it's red hot. Right now, there are like 520 companies lining up for IPO on the Hong Kong Stock Exchange. So there's no shortage of supply, but obviously with the global macro backdrop, with the Fed, who knows? The Kevin Walsh may raise rates, will tighten the liquidity. So the demand, the liquidity, is really a part of the equation that we're waiting and seeing. We don't know what's going to happen. But as an LP, a general, maybe it's just us, a general advice I've been given to all the GPs is try to make your fund more flexible and make it, if possible, shorter. Because if you lock me up for 10 years, man, who knows what's going to happen in 10 years. Frankly, we have been hit pretty hard in the last few vintages, especially 2020 and 2021. We invested at a high valuation and the access basically dried up. So LPs are still healing their wounds, if you will. So now the new hype come, and among the LP universe, people are questioning with a healthy dose of suspicion. Is 2026 another hype year that will end up being a very bad vintage? Are we overpaying? Is everything too good to be true? Obviously, VCP investment are sort of micro or granular, sort of bottom up business. So you have to look at each individual asset's quality and assess their potentials. So I understand that, but from again an asset allocation perspective, so we still back great VC funds. We still select very selectively some winners as a direct investment targets. But what we're doing more now, especially to deploy a lion's share of our clients' capital, we're moving from the gold diggers to the shovel makers. So we're backing more on the data center, the infrastructure side, the energy, the data center. So the sort of halo assets. So that's where we are looking more and putting more money in, both on the infrastructure side and on some of the new technology and new solutions startups.
Thank you very much, Andy. We do have 3 more minutes here. So I'm going to wrap up this panel because I do want to ask this one. We have talked about deep tech underwriting, lab to market efforts, and a little bit on exit. What is the most important action by either macro asset allocators, private investors, or universities that you would consider taking to help de-risk early stage deep tech risk in China? Philip, maybe we start with you.
I'll keep it short. I think to de-risk, you have to invest. If you don't have exposure to Chinese innovation, China AI, China robotics, I think that's a risk. And I think that's probably one of the wider, things outside of Asia you hear about. So I would say de-risk is get exposure to it.
Thank you. Andy?
I want to say understand your risk. So our target is not to hit or beat some benchmarks. We're not comparing to some other guys. We're hitting absolute return targets. So our clients tell us 8%, 9%, 10% annually, consistently. So that's what we're doing, and that's why where the asset allocation comes in. So we don't bet on a single thing. We do it in a diversified way. We do it in a selective and visible way. So de-risking to us is really to stay away from the things that we don't understand.
Thank you. And Dr. Wang?
Yes, from university perspective, we are on the other side of the table, and a lot of times we think quite differently from the investors because as a public institution, our key mission is to really have all those good ideas, innovative ideas, or talents get out of the campus and to translate it into something. They may fail in the first time, but they will, really make successful startups later on. So for us, the biggest action we're experimenting is really to build good ventures, because combining good technologies, good talents, and also good capital together to really help to nurture those, probably the seeds for the future stars. So that's what we're trying to do, to de-risk, probably for everyone, for the investors and also for the general public as well.
Thank you, Alice.
So from like a venture capital perspective, like there are sort of like two risks that we usually face. Like the first one is if the idea can get out of the lab. So to mitigate that or de-risk from that perspective, we usually like look at the ideas or the team can commercialize their ideas or like innovations from day one. So meaning like they have a team like with a strong R&D capability. They also have people from the industry who have the experience and understand where the pain point is and where the technology can be applied. And the second one is we talked about like US, China, talking about geopolitical frictions, etc. I believe like a well-planned globalization structure, globalization plan from day one is also important. It can be either like what I heard a lot from like this panel, like not this panel, but all the panels today is like globalization from day one. Like a lot of startups start to realize they need to set up like an overseas entity to attract more attention, to attract more capital. They already have the attention to monetize those attentions into the capital and investment into the entity. But what is on their way is the corporate structure. So like globalization strategy and structure from day one is also important. So like two factors for me. Thank you.
Thank you. And Raphael?
Yeah, so very brief, I'm wary of time. Number one, what Philip said. So for us, de-risking is also, it means diversifying. Don't go all in. We're not going all in on AI. We're building a diversified portfolio. And the second thing is something that Andy said earlier. You know, I don't think AI is a bubble, but some of these companies and valuations have a bubble character. And we have seen it. I mean, last week I was at a company and they're raising 2 rounds at the same time with different valuations. That's not good. So the second part of de-risking is be disciplined and don't overpay. Nobody has ever made money by overpaying. So just stick to what your principle is and then be tough and disciplined on pricing.
Thank you very much, everyone. With that, we conclude this panel. A round of applause to our speakers, please.